This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
I'm Gord Long with GordonTLong.com, and I have with me this morning Ty Andros. Ty is the president of TraderView, publisher of the TEDBits website, and writer and editor of his very well-recognized newsletter also named TEDBits. We will continue from session 1, already in progress. Everybody's familiar with margin calls in the equity markets, but people are not familiar with what can happen when debt gets non-performing. And the way we have used with securitization, we've used debt as a form of an asset and a security. And we've never seen a collapse. But now we've got all of the sovereign debt being downgraded, or they're being stopped.
We've never seen a collapse in our lifetimes.
Correct. Various forms of this have consistently happened in history. Consistently. The moment you move from sound money to unsound money, or move to a fiat currency-based system, there's never, could be stand to be corrected, but I've never seen one in history of a fiat currency that survived.
It's as certain as death.
So you could debate that, but here we are in the full throes of this. Absolutely full. There's not even a question. It'll take a market clearing event to force us to adjust the books. And it will happen, and it will be a healthy process. There's going to be a lot of pain the longer we drag this out. And we made a massive set of mistakes in 2008 with bad public policy when we should have put some of these banks into bankruptcy, split them up, broke them up, put them into stronger hands, and written off large amounts of debt. We didn't do that. Now, it could be argued, Ty, we were so far gone in 2008, we had no choice.
Well, you have no choice if you're in charge and it's your thing. But you have to understand that, most of the people that are listening to this, how many of you really know that we've had 4 currency extinction events since the United States was founded? Continentals, I've forgotten the list.
Yeah, but every one of the banks, that's why we couldn't call the Federal Reserve a bank, because previous generations had went through exactly what you just described, Ty. And so they just stay away from it.
Maybe inconceivable, but it's actually something that's happened in the United States.
It has.
So let's go to the next slide, Gord. This shows you really the absurdity of what's going on. It shows how much dollars worth of debt gets you in GDP. And, of course, this is a reflection of debt not being used in something can self-liquidate and pay for itself and being redirected towards consumption. And a dollar today is now producing 8 cents of GDP. So when the government borrows $1.3 trillion, we're getting $100 billion worth of GDP, less than 1%. And other than that, they can call that spending and borrowing GDP. But in real terms, it's completely, just destroying our futures and destroying our children. And it's only just begun. And of course, to see, let's go to the next slide, Gord. What's real GDP adjusted for real inflation, and it's actually using a 1990 definition of it, and it's done by John Williams. But when you really look at this, you can go back to 2000, and other than briefly in 2004, the United States economy on a real basis has been shrinking probably an average of 2 to 4% compounded annually. And, that's just nominal growth substituting for real growth so that they're able to continue to tell people on the street that things are growing and they're doing a good job with their policies. But at the same time, everybody knows that everybody's a little shorter. Everybody doesn't have quite enough money to buy the things they used to be able to buy. And that's okay, because if you don't have the money that you need to buy your education or get the car or whatever, we always have a predatory banker ready to give you the money and make you a debt slave. I mean, we need to just look no further than student loans, which that bubble has popped, as you well know, Gord. And, student loans are no different than subprime mortgages. They were given to everybody. No underwriting was taken into consideration. They didn't check to see if you had the ability to repay, or the education you were receiving would create the income streams necessary to repay those loans. And so now that the government's in the game, those are debt slaves directly to Uncle Sam. And of course, that's what this is all about, is controlling the people. And that's what this is all about, is dictatorships unfolding.
This chart shows it's actually been getting wider and wider. We've been in negative growth here for at least the last 10 years and longer in the United States, and globally, certainly for the last 4 to 6 years. But it's getting wider and wider, and it really shows on the John Williams adjusted inflation levels even clearer. And the point I would make is it's becoming very, very obvious to citizens and their disposable income that they're not better off. And corporations themselves don't see the growth. They can't see real growth, and they've stopped believing to a large extent the government job numbers. That's why somebody like John Williams has a business, and how he got into it, because companies were finding the GDP numbers didn't match what they were seeing as what their expected growth would be. And that was many, many years ago. So the point I'd like to make is this distortion's got so large that corporations can see it, and they have stopped spending. And that is capital expenses or capital expenditures, investing. And so CapEx is absolutely plummeting because they can't see the growth. So what's happening is these corporations, in not spending the money, are building huge stockpiles of cash. And you say, well, that's good. That's terrible, because they're not reinvesting it. So what are they doing with that cash? Well, they can't find good investments. They're literally putting it in money market funds with the banks. So if you look at, for example, the United States banks, you'll find they've got $2 trillion more of assets. By assets, I mean deposits from these corporations and individuals who are afraid of growth that isn't there, and looking to protect their money at zero income, almost no interest. And so the banks, on the flip of this, are finding that their loans don't even match the amount of assets. So they're using that money, that $2 trillion, in their prop desks that are going back into inflating these asset markets, whether it's through the debt that they're buying and the rehypothecation we talked about earlier, or whether it's into the equity markets. So it's all built on false growth, mispricing, and malinvestment. That can go on. How long? We don't know, but it does. The capitalist system does not sustain itself in that fashion.
What it does is it short circuits the next wave of wealth creation.
Precisely.
And that's why we have 50% or 30% or 20% or 25% unemployment among the young. And Gord, that the unemployment statistics here are fiction, and that if you really add the people in that haven't looked for a job in the last month just because they haven't had any luck in the past, it's just short-circuited everybody's future. And when you start a decade late after coming out of high school or college, it short-circuits everything in your whole life, because life is a lesson in compounding income and experience and everything else. It's a disaster unfolding for future wealth generation.
Yeah, there's two parts to this, Ty. The youth today are going to be a youth of depression mentality, because they're not getting the skills, they're not getting the opportunity, they're not being able to enter the workplace. Therefore, they're starting families later. If they're starting, they're moving back home. They're not buying housing. 75 million baby boomers wanting to sell their house and retire. Who's going to be buying them? These are the underpinnings that are absolutely crumbling. And we have a depression going right now, but it's hidden from us because of the amount of transfer payments and entitlements. We have 47 million Americans that are on food stamps right now. And if they were sitting there during the Depression and were standing at food lines, think of 47 million people in food lines, we'd know the magnitude, but it's hidden because we give them a credit card and we print the money. And I can go on with, the amount of people that are on unemployment insurance that are now moving to permanent disabilities, the frauds that are just starting to cascade and build. So we're hiding these numbers that you point out of negative growth are clearly there, and we're papering it over with more and more paper and more camouflage. But it's pretty blatant and easy to see, if you care to look.
One of my postulations over the years, as you know, is that the baby boomers will not escape with their wealth. And they won't escape with their real estate wealth, they won't escape with their stock wealth, and they certainly won't escape with their paper wealth. And because there's no group coming up behind them that can buy those assets off them at the inflated Ponzi prices they're at. And everybody's miscalculated here. And this is what happens when you have a socialist fascist culture, and where you abandon capitalism and substitute socialism. Whether anybody wants to believe it or not, this is not a failure of capitalism. This is a failure of socialism. And let's go to the next slide, Gord, and let's look at how complacent people have become, because it's at multi-decade lows or highs in complacency, which, really is, look at that. Advisor complacency, all-time low. The chart on the left, the monthly risk aversion chart, which is from the Luthold group, is just screaming, sell, get out, okay? A bomb's about to explode. I like it so much just because it includes credit and swap spreads, implied volatility, currency movements, commodity prices, relative returns between high and low risk assets. It just, and then look at that, just going back to 1980, he's got it at an all-time low. And as you know, Gord, people move in waves of emotion, and high volatility follows low volatility like night follows day. And we are looking for some kind of explosive event to happen and move those people like swallows to the sell side. And they will. Okay, because who's out there when this really starts cascading lower? The Federal Reserve can print trillions. I'm sorry, that's tens of trillions they're going to have to buy. They will be overwhelmed. The market will clear.
This is one side of a coin. This whole complacency and why we have it is one discussion. As I said earlier, the flip of this is we're seeing uncertainty at the same levels on the flip. That is, levels of uncertainty are unprecedented, whether it's political, whether it's taxes, whether it's investment, whether it's economics. And so we have that level of uncertainty. As I said earlier, that's a bad mix. But then if you overlay that with the fact that we now have a global economy where everything's interdependent and it's more complex than it's ever been, and we've never had, and complex systems are very fragile systems because they weren't designed, they evolved. And so when you get the level of uncertainty and the complexity, typically something will break. And complex theory tells you that in fragile systems that are not robust, it'll break and it'll fracture and it'll cascade. And that's what we're setting ourselves up for. Absolutely clear. And the question is, when it snaps, will it be containable? We were on the hairy edge in 2008 before we went to the degree of printing that we've already done.
Well, of course, and we really haven't talked about Obamacare or Dodd-Frank or really the stimulus bill, which were all really put off until this presidential election was passed. Because had people seen the complexity and the mind-numbing amount of new regulations and new laws that are being implemented at this time, it's tens and tens and tens of millions of words, and of course we're all expected to know them and abide by them, which is literally an absurd task. But people don't understand the level of complexity that is actually being injected on a daily basis. And, of course, we've got the same thing going on in Europe with that unaccountable bureaucracy in Brussels. And, of course, they're unelected and they're they're collecting power, aren't they, Gord? They're taking freedom and implementing their will. And like I said, socialist fascist countries have to impose their poor policies on others because they can't compete on their own. And the only way they can compete is by using the force of a government gun to get you to do the wrong thing, but one that benefits them first. Now let's take a look at these bond bubbles, Gord. Bonds are going to be one of the final bubbles. Bonds and currencies are bonds as well.
I really agree with that because, we were just talking about, for example, financial repression, and you said that the baby boomer generation will never get out with their wealth intact. Generally, they have their wealth tied up in housing, which has been a terrible investment here in the last year. And now we have this whole issue of this next generation, whether they're going to be even interested in housing. We have stocks that haven't generated anything in 10 years. So everybody has flooded into the bond market. And there's been money to be made in the bond market. But it's almost like we got everybody on the Titanic on the same side of the ship.
Completely an illusion. A capital appreciation in a paper. Okay, they're IOUs, denominated in IOUs, and let me explain that briefly. Let's say that the new safe havens are now corporate bonds of people like IBM, Procter & Gamble, General Electric, all the big multinational firms that, can have pockets of weakness or pockets of strength. But the problem with that supposition is that they're denominated in an IOU as well. So if the government takes the value of the paper down 80%, and I mean the purchasing power, and you have $1 million bond, are you sitting on a gain because the bond repriced 30% higher? Or are you sitting on a loss because what you put $1 million into only will buy $300,000 worth of goods and services when you get paid back? I would argue that it's a loss. And like I said, Gord, this is the final bubble. This is the final blow off before people wake up, where they learn that you can't print wealth. You can't print money. All you can do is build wealth. As you well know, Gord, you can only, mine it, manufacture it, build it, grow it. But there's one thing you can't do. You can't print it.
Part of the illusion, and I've used this analogy before, it's like the old children's game of musical chairs. And as you recall, there was always one less chair, and when the music stopped, and if you were tagged out, you got tagged out, and you went and stood against the wall, and there was one less chair, and the game continued. Today, what happens is you don't get tagged out. What we do is we print more money, we roll over the debt, and the game continues. So you have the same amount of people, but fewer and fewer chairs. And so we're having fewer and fewer opportunities that are risk adjusted to invest in. So you now have huge crowds forced, whether it's the individual fund managers that have moved to the bond market and are actually moving into all forms of junk yield to try and capture some kind of yield right now. So, if you remember musical chairs, it ends pretty badly when you got all of these people that are going to jump on this single chair. And I would submit to you, we're pretty close to that right now as the only thing that's left. Now, what's going to happen with the debt market or the bond market? Well, for starters, if you had any kind of credit downgrade, because it's been a license to print money, Ty. I mean, as interest rates have been steadily going down, the banks have been making a fortune on the appreciation because they put it on their books, and they can then therefore do a net present value every time those bond prices go up in the extended duration. So it has been a way of putting money into the bank's pockets like we've never seen before, and individuals have begun to do that. But you've got historic low rates that we've never seen any kind of move up, and it can't happen or the system will collapse because of this rehypothecation we talked about. So but everybody's there where interest rates can't go any lower. It can only go one way. So what can disrupt this? What'll blindside them is you have to have credit downgrades if you can't pay it. And so everything's assumed it's risk-free right now. Wait till the U.S. has a double downgrade and we get down to a single A or lower. Do you know what that does to the value of the credit? But that will be adjusted. That's not necessarily, they'll play games with that. But what destroys it is the currency. What it's denominated in. Well, right now, it's, whether it's U.S. dollars, there's a cartel of currencies because 95% of the currencies are one of four: Japanese yen, a euro, a sterling, or the U.S. dollar. And you can't invest off-world. But the moment there's going to become, and it's coming, an alternative way of tying your money up in a non-debt structured investment, the money will flow and it'll collapse. And that's coming. And where it's coming is you're seeing the BRIC countries and the Asian countries buying more and more gold. They're buying at phenomenal rates right now. And they, at any given time, and they don't want to do it because it hurts them. At any given time, if they decided to go to a more currency or gold-backed, silver-backed, precious metal-backed currency, this would disintegrate in a nanosecond. Again, they don't want to do it, Ty.
You know, there's no value in a treasury. Just think of a 2-year note gives you, you give them $1,000 for 2 years and they pay you back $5. You give them $1,000 for 5 years and they pay you back, pay $35.
Now, why do they do it, Ty, though?
That's part of destroying capitalism, is destroying the pricing of capital. Okay, I mean, we're going to look here. This is the destruction of capitalism, and it's fully underway, and we're getting there. Let's go to the next slide, Gordon. Just start talking about that. But bombs are bonds, and you can't store wealth in it. Take your money and put it in gold. Okay, and of course we're ruled by a very unholy alliance. And it's banksters and big business, trade unions, the mainstream media, and government. And they're just basically entrenched fascism. We only need to look at the savior of the middle class, as it was said over the newspapers in the last 2 or 3 days. It was nothing of the sort. It was a payoff for campaign contributors and special interests. Obama raised a little bit over $1 billion. The people that supported him in the last election had tens, if not hundreds of billions of dollars of payoffs legislated to them in that bill. And everybody else's taxes went up and no one escaped. And the small and medium-sized businesses, which is basically the real private sector, are being taxed and regulated out of business and looted by central government and their acolytes. The spoils are then redistributed to crony capitalists and special interest supporters. Taxes and regulations rise for all but the above and the public at large. This is absolutely no victory for the middle class, no matter what the mainstream media tries to tell you. The mainstream media is very important, because it's combined with the school systems to manipulate what Lenin called useful idiots in the public at large. And these people may be able to read and write, but they certainly haven't been taught any history. And they haven't been taught anything about logic or common sense. They basically are adrift in a world of headlines. And they don't understand that all the headlines are basically double entendre. And they mean exactly the opposite of what they're being told. And we've entered the age of unlimited government, haven't we? And centrally controlled economies and the unlimited corruption that goes with it. And of course, that's the definition of socialist economies. Just ask Mao, ask the Chinese. I mean, the Central Party, those people are getting, fabulously rich, but we can just see it's happening here too. Go ask Al Gore or Bill Clinton or, people who had maybe $1 million or $2 million before they took office are now worth hundreds of millions. Do you really believe they became geniuses at business? Or do you think they're maybe being paid back by the powers that be for favors conferred during their periods in office? I would argue the latter. And, it's just it's an entrenched fascism, which is an offshoot of socialism. But it's really toxic for you and me and our children.
This whole world of unlimited government, massive control of central planning, movement of authoritarian with more regulation is the world that I refer to as statism. And it is a form of fascism. There's no question about it. That's what we're in, and it's not something to speculate. That's the realities. And it's going to lead, in my opinion, to some form of constitutional crisis in the next 18 to 24 months. when Americans and countries wake up. And they're going to wake up because their disposable income will continue to get crushed. But when they wake up, there might be little they can do about it.
Well, they're certainly taking all the guns away. They really are in a position to cram it down everybody's throat.
What they've effectively done with whether through executive orders or regulations, put us in a position where there's a switch. And at any given time, that switch can be flipped, and we would be in a full, almost martial law, controlled economy, police state. Certainly we border on a police state at this point in time.
Well, it's like you said, all the laws have been passed.
Everything's been in place.
Everything's been put in place. And when the real implosion takes, which is Cloward Piven, they are there to seize power, to protect you. But it's really protecting their own corrupt interests.
We are breaking this session at this point and will continue on the next tape. We have a very large audio and iTunes listener base who have requested that the sessions be kept to approximately 20 minutes in duration. We'll be right back.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.